Hello everybody, it's Gui Costin, founder, CEO of Dakota, joined by my good friend and colleague, Tim Dolan, who's been with us fundraising since 2011. So Tim, this is just, on a monthly basis, we do our Rainmaker shows. This is not sales training. I really want to point that out. What we're going to talk about today are all the principles that we have lived for the past 15 years. And it all comes down, the whole theme of what we're going to talk about today. And this can go from, hey, someone just starting in an investment sales role as a fundraiser, or even your more seasoned professionals, just like us. We just want to kind of get reminded of some key things, right? Refreshers that we should be doing. But remember, it's not sales training. It's about how to get leverage in your sales career. That's what this is all about. And there are a number of leverage points that are controllable. So there's a lot of stuff, Tim, as you know, we just can't control, right?
Exactly.
Yeah.
Yep. And this is all, we'll get through it, focusing on what matters most, right? Your messaging, right? Leverage key points, but again, focusing on what you can control.
Yeah, there's only a few, because if you really think about it, right, we're talking key points of leverage, and really what that means to us is focusing on what you can control. And Tim, let's just talk about the things we can't control, right?
Yeah.
Right? We can't control the stock market, right? We can't control the Fed or interest rates.
Yeah. There's so many things, right? Where, right, as fundraisers, we're not picking the stocks or bonds or the investments. We can't control performance, but we can control how we react to performance swings, whether they're good or bad, right? Our messaging around that. So again, how are you going to take the information that's come to you, right, and spin it in a way that's valuable for your prospects and for your investors?
Right. So the whole theme of the Dakota Way approach to sales is the fundamental truth is focus on what you can control, and then of course focus on what matters most, right? There's only a few things, right, that you truly can control. That's really how you spend your time, but then how you're leveraging your time.
Yeah, and we'll get into this in detail on the show today, but focusing on what matters most, right, is controlling what you can control, but what is the most important, right? And that, as a fundraiser, as we talk about it, being addicted to setting up meetings, right? I can focus on that. I can control that by my outreach and the number of outreach on any given day. So what matters most is focusing on people that buy what you sell, right? Being very narrow in your market and your prospect list, and then the messaging around that.
So as we get into this is very structured of how we look at it, and it really contains 4 key elements. So number one, you do have to embrace it. This is a challenge. Okay, raising money is a challenge. Yep. Getting meetings is a challenge. We get all that, but you have to embrace it. So as we start off, outside of focus on what you can control, we talk about know who to call on. Now, so one thing I do want to talk about, because it does come up, is it's really important to create a sales plan. So we like to call it know who to call on, which is your TAM, but that starts with a sales plan. And talk a little bit about, Tim, our interactions with the partners that we've been raising money for 17 years, 14 years, in terms of setting expectations, using a sales plan. So this is a key point of leverage, right? And the reason I say this is because when we started, we didn't want to be that person who's out doing meetings or something and having that dreaded phone call from your boss, from your client saying, hey, where's the money? How come we're not raising more money? Where's the money, right? Yeah. So talk about how important it is to create a sales plan and then have a process to report back against the plan.
Yeah, so I liken the sales plan to no different of an investment process, right? This is a sales process, right? So sitting down with your boss, we're outsourced fundraisers, so we don't have any product internally, so we need to report to our partners on a weekly, 2-week basis, right, on what we're doing against the sales plan. But the sales plan is very specific on, right, the strategy and the market fit and who we're going to be calling on, right? Account coverage plan is a big, important component of it, right? Whether it's the RA channel or if you have an institutional or a foundation endowment product, right? Whether you're an alternative or a mutual fund, that directs the sales plan. And then every week you sit down with your team internally, or if you're outsourced like us, right, to your partners, and you say, here's the sales plan, and here's what we've done over the past week to execute against the sales plan. And we'll get into it around activity and pipelines and reporting through a CRM system, but the sales plan really guides the sales process, much like an investment process.
Yes, and it's not a sales plan just to create a sales plan. Obviously, everyone's like, yeah, create a sales plan. The point is to give you leverage within your organization with your boss. And what I mean by that is the dirty little secret of a sales plan is you have to get your boss to agree what good looks like, what success looks like, right? Because then a lot of times it's maybe not raising money, but it's making sure you're covering a certain channel, getting a certain number of meetings, explaining how you're doing against the plan. So it's really getting leverage with your boss so everyone buys in and they buy into your process and what success looks like. And since you're defining what success looks like in your reporting, we recommend once a week back to your boss progress against the plan. It's absolutely vital. So create a sales plan, not just to create a sales plan, but to create leverage with your boss. So you're dictating, you're the dog, not the tail. Next, okay, once you have the sales plan in place, in the sales plan, we really want to talk about the TAM. And when we talk about TAM, we think of all of the people that buy what you sell, as Tim was just alluding to. And we believe product structure drives channel focus, right? So mutual funds, separate accounts, RAs, banks, broker dealers. And then in some cases, the more institutional market. But do you just want to talk about how focused we have been on the TAM and the success that we've had by doing that?
Yeah, I mean, this goes back to, we want to be in the fundraising business, not the convincing business. Right. And taking a strategy, right, a QP 10-year lockup to the RA space, you have a very defined universe, right? Might be 100 to 200 of the top RAs, maybe a select few, sub $1 billion, right? But that's not probably the best use of time. Right?
Or taking like a longer equity strategy to the foundation endowment market, right? Maybe on a tertiary basis, but the primary basis, that's going to be RAs, banks, broker dealers, right?
It goes back to the 80-20 rule, right? Just taking your strategy to the widest, right? Cast the widest net of people that use your product structure, right? And again, being in the fundraising business, not the convincing business of a strategy.
Right. So defining your TAM is really, really critical because time's not fungible. And if you spend a bunch of time trying to sell long-only equity strategy, primarily in the foundation endowment market, it might be a cold winter. Okay, we're not going to raise a lot of money. However, we know specifically that RAs, banks, and broker dealers use mutual funds and separate accounts and are very active investors in long-only equities, just speaking for our own book. So TAM is absolutely critical, defining it, putting the sales plan. Let's talk about the execution of the you know who to call on. So we have, it's nothing so novel, but I can remember back 2012, Ryan Creighton joined us, and I'll never forget it. He would walk through the doors and I felt incumbent that I needed to make sure he had a focus for the day. So we have always approached the execution of know who to call on and the sales plan around city scheduling. Tim, do you just want to talk about how we do it?
Yeah, so it's basically an organizational tool, right? If you're covering the RAs, there's 2,800, or the consultants, there's about 150, right? That could be overwhelming for one people. A lot of firms have a team that covers a specific channel, right? So truncating down a specific channel or set of buyers, right? Where do you start? So we organize it by metro area or where the account's based, what airport are you going to fly into? So Chicago, right, has a number of accounts, and just pick a day, 4 to 6 weeks out, and start city scheduling, right? 9, 11, 1, 3, and 4:30. Again, we didn't create the process. It's not novel, but it allows you to cover your channel, your TAM for your product in a very succinct manner, an organized manner. And we like to have at any given point by fundraiser or salesperson, 5 cities on the calendar.
So 5 cities on the calendar at any given time that you're sending 20 to 25 emails out every day doing meeting requests.
And importantly, right, you're not going to go 25 to 25, right? If you get 5 meetings, we recommend go. The great thing now, we have Zoom and Teams and others. You can, if you don't get a full day, just flip them to calls, right?
And if this is your first time watching this, I hate to break it to you, but the reality is, if you want to be a successful fundraiser, half the deal is becoming a professional meeting setter upper. You have to be in the business of setting up meetings, and you have to be disciplined to that, because as much as pedestrian as that is, it's the requirement of the job. The other half is
you can't sell if you don't get a meeting.
Exactly.
It's very hard.
And so city scheduling gives you focus, purpose. You don't have to think. It takes the thinking away. We created our Dakota Marketplace database to be built around city scheduling, built around metro areas with all of your key channels within that metro area. So we believe in it so wholeheartedly. It's, we've raised $25 billion doing city scheduling. So city scheduling is the execution component. And then once you actually do the meeting, Tim, this is the funny part. We always talk about it. If you're going to do that great job city scheduling, you book those 5 days of meetings in Cincinnati. The question then is, when you go into those meetings in Cincinnati, what are you doing in the meetings? And do the meetings end up being productive? Are you preparing? So we're going to walk you through, there's really 3 core elements of a meeting. So, and Tim, how many times have we talked to allocators and we'll see somebody, yeah, well, who's that person? And he's like, well, they just came and met with me, but I really don't know what they do,
Yeah.
right? So that happens quite a bit. So there's 3 core elements to doing the meeting. Now, if you're a very experienced fundraiser, okay, everyone has their shades of gray of how they approach this. So clearly, we're going to come up with 3 that can fit into your stick, if you will. But we do believe in the 3 sections. So first off, I want to talk about just how you open the meeting and those 15 to 20 questions.
Yeah, this is really centering the conversation, covering the easy questions, right?
Yeah.
Who are you? Where are you based? Number of employees, assets under management, a number of investment professionals, the strategy that you're focusing or strategies, if there's a couple, right? Really centering the conversation so that the listener, the buyer on the other end, it's like, okay, we're here to talk about concentrated large cap growth run by an employee-owned firm based out of Greenwich, Connecticut. Got it, right? They'll know, right, if that's going to be of interest to them pretty simply.
Right, the manager's 35 billion in assets, teams have been together for 20 years. So you're checking all the boxes of how they should be thinking about you up front. A lot of people don't get into that. Then what ends up happening is the person across the table has to ask all these questions, and it gobbles up time because you only have 60 minutes, right? Cover the easy questions in your opening remarks, which centers the conversation. Right now, they didn't know what they should be listening for. Once you do that, right, now they lead you, if you will. The goal, okay, is to get into a conversation.
Yeah, absolutely. And if you have a portfolio manager, and this is a lot of nuance and massaging, right? PMs want to talk about what they want to talk about. Right. Even if they get asked a question, right, they'll sometimes totally ignore it, right? So that's on us as the salesperson to make sure the conversation is a conversation. We're not just puking on them just about our product and what's going on in the market, right? Asking them questions, what they're interested in, right? Strategies that they use that could be similar, how they use them, right? That allows a little sales tactic as well. So,
and if you're in a meeting with an RIA, I strongly recommend going to their website beforehand, not just checking the bio of the person you're meeting with, but see if they have their quarterly newsletter. Read the quarterly newsletter because it's very informative. So then you can have a conversation about how they're thinking about with their clients putting money to work. So, and the reason we say get into a conversation, because anybody who's watching this, we know portfolio managers can talk for 60 straight minutes, and then the person across the table literally never gets engaged, right? So it sounds simple, it sounds common sense, but it's really important to engage in a conversation. And then to close it out, okay, this comes down to follow-up, okay? Because I get a lot of questions about, hey, what's your follow-up cadence after the meeting? Is it a week, 2 weeks, 3 weeks? And what do I say, Tim? The follow-up happens in the meeting. So you want to tackle the first question?
Yeah, so
this is to close out a meeting, by the way.
There's really two examples here if you're marketing a long-only strategy versus an alternative, right? So look, long-only to start. You've done the meeting, you've covered everything, you think it's going very well, but you want to do the follow-up in the meeting. So you ask the questions. 1, is this an asset class that you all invest in? They took the meeting, so you're assuming yes, right? But you want to be certain, right? Do you invest in strategies?
Don't assume, or do you see, or do you see this type of a strategy fitting within your asset allocation models?
And if they say yes, you say, great. Do you intend on doing a search within the next 9 to 12 months? And if they say yes, you know what the follow-up is.
Then you say, could we be included in the search?
And then DDQs, RFIs, right, coming on site, bringing more of the investment team to their office, asking those questions. And if they say no, right?
Then you know what the follow-up is.
Yeah, thank you. We'll keep you on the distribution list. We'll reach back out when we're in town. If you come to New York, let us know.
The biggest time waster for a salesperson post-meeting is not asking the tough questions to close out the meeting so you know exactly where you stand when you leave. Because you don't want to go back, oh, they're ghosting me, they didn't return, I sent the follow-up information, everything. You have to ask those two tough questions.
And allocators, they enjoy these conversations, right? Because the last thing they want is for the salesperson to assume is the best meeting they've ever done. An allocation is going to happen in 2 weeks, and they're sending over all this stuff. It's like, whoa. We're not even doing a search, right? So they actually want you to ask these questions to give you insight into their process. That it's like, this is interesting, but probably not for another year or so.
And if you have a closed-end fund, the question I ask is, again, do you see, or would you ever see this type of a strategy fitting within your asset allocation model? If the answer is no, you know where you stand. If the answer is yes, then you say, hey, do you think then you'd be able to make our final close on 3/31/2023? If they say yes, then you know what the question is, okay, what do I need to do to get you more comfortable with the strategy, right? So now these are all things you can control back to the points of leverage. So ask the 2 tough questions. We did this because we banned the word great meeting. So people would come back to the office, how's the meeting? Great meeting. No, I want to know, like, what are the next steps? What's going on within that engagement? So that is know what to say, be a master messenger. And now to close out, this is different than what we were just describing, but creating a killer follow-up system. So the biggest leverage point a salesperson can have is a CRM. Bar none, it can go from a 1x to 2x to 10x your time just by simply using and leveraging a CRM. So Tim, talk about this is how much we value internally a CRM and getting meetings that you've scheduled into your CRM. We actually created a custom Slack app that we fill in those 8 or 10 fields, and then it goes right into Salesforce. Then it shows up on a weekly or a daily run of meetings that we've scheduled. Do you want to talk about how important that is?
Yeah, so this goes back to leveraging and managing up, right?
Right.
So when you sit down with your boss on a weekly or every other week basis against the sales plan, right? This is where CRM comes into play because you're logging your activity, you're logging your conversations, you're logging your opportunities. So now you have a past activity report of who you've talked to over the past week, month, 3 months, year to date. But then you have your pipeline of all those conversations of what's real, right? Finagling all crazy sheets of paper and Excel spreadsheets, right? It's not scalable. This is all about leveraging the CRM, leveraging your time. So then when you execute against that sales plan, you're reporting.
Yeah, right? and all your information's in the CRM. It's not on a yellow pad. It's not in an Excel spreadsheet, sticky notes in Outlook, in Gmail, all of that. It's in one place that you can run reports on. So the first thing that's a key leverage point is past activity to trigger sales actions.
This you just hit it right there. This is all sales action, right? So we talked about I'm going to Chicago in 4 to 6 weeks. I did the day of meetings, right? We asked the 2 tough questions in the meeting. All the activity is in Salesforce. And then next thing you know, it's October 15th of 2024. You're like, oh my God, I haven't reached out to this person in 6 months. Right. So this activity report, what it does is you're reviewing it on a weekly basis. And you're like, wow, I met with Loyola Chicago. I need to follow up with them. Time has flown by, right? I've been doing other things. So the activity report is a trigger.
If you're really good at scheduling meetings, and we talk about that, if you're really good at that, what that's going to translate into is you'll have a lot of activity that you enter into your CRM, Salesforce or what have you, and then you can run past activity reports with the name of the firm, the contact, their title, email and phone number, right? And you see it all there, and you can review it to then trigger sales action. So that's really critical. The second thing is, which dovetails right in with this, is you need to create pipeline reports, because when you do sit down with your boss to go manage and give progress against the plan, you're going to be able to show a pipeline, your opportunity pipeline. So talk about that, Tim, because I think that's also a sales action situation. But what it really does is it gives you a visual of how you want to push it, because what you're really trying to do is, depending upon your stages that you have, and we create custom stages, you're trying to move up the stages. So if you can see it in front of you, and then you're going to have 2 custom columns. You're going to have current status and next step. There's a text box that'll say right there, what is the current status of this opportunity, and then what is the next step. So then when you sit down with your boss, you can just print that out. You can review it on a screen. It's right there, no stress, the whole thing, and you just go through your pipeline report. You're obviously extremely organized. You're tight. Again, huge leverage point.
And also a field I would say it's component on the pipeline report is AUM, meaning if they were to allocate, what would the AUM opportunity be, right? Because we get a lot of conversations, and I'm sure PMs do this for others as well. It's like, hey, I know Morgan Stanley, I know UBS, I know Wells Fargo, certain platforms. It's like, that's great, but getting an approval leads to $0. Then there's the second sale process, right? So this pipeline is, if they pick you all, X will come in terms of dollar amount. So having that amount field is crucial in the pipeline.
And then by entering this information in, you then are able to manage penetration rates, if you will, because really if you're going to Boston, you cover RAs, you want to know, right, how many you've covered, You want to be able to put that information in. This all leads to that. And so we truly use our CRM Salesforce. It runs our business. We wouldn't be able to do any of the things that we've been able to do because we're able to turn a 1x person into a 10x by simply leveraging a CRM. So to recap, Tim, at the end of the day, I know it sounds somewhat simple, but there's only a handful of things that a salesperson can control, right? You can control where you focus your time and energy, okay? You can focus who you call on, and then you can control how you execute, right? You can control how you prepare for a meeting and then work within a meeting, and then you can control entering your information into a CRM to then be able to have rapid recall. And that's what this is all about. So we will send out an ebook that walks through all this, but Tim, any closing comments, thoughts you have?
No, the one thing I would say in terms of the follow-up coming out of the meeting, right, and what we like to do is recap the meeting in your email follow-up, right? Because you don't want to assume that analyst or the allocator absorbed everything, right? So covering some of the key questions or topics, covering some of the things that you didn't get to cover in that follow-up email, what was discussed during the meeting. So now they have that in their file. So the one little follow-up thing of just being a little bit longer coming out of the meeting, so they have all the due diligence notes.
Yes, and just to close out, I think this is a key thing. The question is email. When you're sending an email to get a meeting, I'm going to break it down very simply. Meeting request in the subject line, date and time, okay? Then 1 to 2 sentences max, your value proposition, who you are, what you do, and why they should care to take a meeting, and then have a clear call to action at the bottom. Keep it simple. Can you meet May 26th at 9 a.m. ? Okay, so clear subject line, meeting request, 1 to 2 sentences max, no long paragraphs, no one reads them, and then 3 clear call to action.
Yep.
So with that, everyone have a super happy holiday. Thanks so much for joining us. Tim, I appreciate your time.
Thank
Very
you.
insightful. Everyone, happy holidays. Hello, everyone. Thank you for joining Rainmaker Live. Hopefully you enjoyed the content. As you know, we have a whole program that's dedicated to training both salespeople and sales leaders, okay? How to lead teams and how to follow the principles that we have followed to raise over $25 billion. If you have an interest in bringing me in to meet with your team and go through the Rainmaker curriculum, I would love to do it. Simply email me at guy@dakota.com.